Today we're going to talk about some of the biggest challenges that I've had switching to end of day trading. Stay tuned, traders. We'll talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today I'm going to answer some questions about my biggest challenges switching to end of day trading. If you've been following me, you've heard me talk about switching pretty much all of my trading to end of day, and the challenges that I've had with that, some of the reasons why I've gone to end of day, the benefits I think that are with end of day, and especially for me, how that's hopefully increased my consistency, my odds of success, and minimized the potential for me to cause account damaging errors. So you know, in the past I've blown up some small trading accounts. All of that was done on intraday trading. You know, I recognize the inherent weaknesses I have as a human being and an individual, not so much even from emotional, psychological, impulsive trading perspective, but also from misinterpreting or misreading the market on the live screen, even on hourly charts. You know, I found that there's repeating patterns over and over again on the hourly charts, but one of the challenges with that is that it requires you to keep going back to the screen, and then that may set up over 3, 4, 5 hours, even potentially. If there's a trade at the Asia close or London Open, it may not completely perpetuate or eventuate until later in the session. But just talking about end of day trading, some of the biggest challenges, I received an email from a lady asking me, you know, what did I find were my biggest challenges going to end of day. Now, the approach that I use is largely based on the opening range. If you've looked at my other videos, you heard me talk about that. I inherently believe that every currency pair has a usually 1 day a week where it will move strongly. Unless it's also, it could be a range extension also if it's a breakout trade, but usually every week there's a setup. And if you've studied market profile in the past, go back, look at your end of day charts. If you've got the Monday separator on there, you'll see that, you know, 80% of the time the extreme of Monday or Tuesday will act as a buying or a selling high or low for the week. So you know, I cover a basket of around 20-25 instruments, but I look at the majors. I look at you know, copper, oil, gold. I don't trade those markets a lot, but I'm studying them to also be trading them as well. But the biggest challenges I've had is that the system is you know, one of the best things is that you know, I'm able to predefine my risk. But one of the hardest things I've found with that trading is that, you know, it's often hard for me to place the orders. These are breakout orders in most cases, so they're limit orders for the market to pick me up with a move. So the market is actually taking me in, and then that bar that I'm taken in from is now also my predefined risk level. So, you know, I would go back and review all the main pairs each week, and I would kick myself because I would see them setting up, but I couldn't place the orders. And one of the ways that I got around that initially was I went to micro lots when I was, you know, really working on this, and my approach was that every single pair had a trade each week. So I would go through these 15 pairs, at least the majors and a couple of the major crosses, and I would make sure that I, you know, 9 times out of 10 would take those trades even with a micro lot, because I was forcing myself to detach my opinion from the market, detach my personal bias from the market, and let the market take me in. And that's where I was able to establish in some weeks 800-900 pip weeks just from merely placing those orders. Now that's not, you know, I've not been able to be consistent at that, but if you force yourself, you know, one of the ways to do that is scale back to where the money is almost irrelevant. And so using micro lots is a great way to do that, because it forced me. I just remember what Jerry Parker said in one of the podcast interviews with Chat with Traders. He said that Richard Dennis asked him the first or second week that he was trading, you know, how everything was going, and Jerry Parker said, you know, I've had some trades in that, but I've missed a few, and you know, I didn't take all the trades. And Richard Dennis said to him, Jerry, just take the trades. Do what we taught you to do when you've got your signal. Just execute the trading plan. Don't worry about what you think the market's going to do. Just do the right thing. And Jerry Parker runs Chesapeake Capital, which is, you know, I don't know, several hundred million or $1 billion under management now. But that really resonated with me because, we talk ourselves out of a lot of trades. And Bill McLaren, years ago, I learned something from him, and he said it's usually the obvious trades that fail. So these trades that look like great trade setups, if you're spotting them, chances are that they're traps. Or 9 times out of 10, the rest of the market spots them too, and they're just not exactly what they appear to be. So often the best trade setups occur at the maximum point of fear and pain. And that was a really good exercise for me. I still force myself to do that every week, and I remind myself that almost every single pair is going to have a good trade. Whether it's one of my ideal 8 trade setups, that's another story. So I'm covering this basket of 20-25 instruments because I'm really looking to get 9 or 10 really good trade setups that fit my criteria, and then I'm just forcing myself to execute my trading plan. And one of the reasons why I've diversified that across multiple instruments is it's a way for me to minimize my attachment to any one trade in particular, and be psychologically vested or over leveraged into a trade. And those are the ones that usually blow up in my face, which I'll have some great trades, and I'll take a trade that's looks like a good trade, or it's not part of my trading plan, and I take a bigger trade on than what I should, and inevitably that trade goes against me, and that's where errors can happen. This is why, like end of the day, I've really forced myself to put the orders in, stay away from the screen, come back the next morning, check those trades, adjust your stops, or if they've hit your profit targets, or move your stop, whatever your trade plan calls for. But that was one of the biggest challenges, was just to detach myself from the market and start placing these orders, place the orders, let the market take me in. Next, probably, the second thing, what I just said was, not looking during the day. You'd be amazed at how many times you might be in profit early in the session on an end-of-day trade. You go to break even, you come back later, the market's pipped you out, and then overnight again has moved strongly in the direction of your original trade entry. So again, if my trading plan is to, when I go back and I back test and it's New York close, New York close, New York close, don't look at the market until the New York close. Place your orders, come back the next morning, look at the market then. So that's probably number 2. Number 3, I guess, is just being patient. Like Bill Lipschutz said, I love what he says. If the people, 50% of the people learn to just sit on their hands, most of the time they'd make a lot more money. And that's probably another mistake that I've made in the past, just trying to trade too much or trying to trade every day because you think you need to make money every single day. This week's a classic example, non-farm payrolls tonight. And, again, yesterday, Wednesday, the market moved, most of the pairs moved well over 100 pips. Now, traders who are trying to scalp 10 or 15 or 20 pips virtually had to do zero work yesterday, with almost very little heat against a position on the opening of the market. And, they're up 100 and something pips with almost no stress against their position. So oftentimes I remind myself, be patient, to let the market do the work. And also when you're in a winning trade, to be patient also, to let it do what it's supposed to do based on your trading criteria. So, hopefully you got some value from today's video, traders. If you're struggling to be consistent, or if you're looking at longer time frames, one of the challenges I put to you today is look at what are the things you're finding hardest with that. See if those 3 things might help you out. Again, number 1, just reducing size. Even if you're paper trading, just start learning to try and identify a trade on each pair each week. Place the orders. Keep a log of your trades, see how you're doing, your journal your trades, use Edgewonk, whatever it is. If you're not using Edgewonk, check it out. Number 2, I guess, as I said, be patient was number 3. And, just, step back and let the market do the work for you, because the trades are there every single week. I kick myself because I'll take, some days I'll talk, and this is the hard part, I talk myself out of placing an order, and usually that's the one that moves the best. So again, I'm forcing myself to execute a trade almost on, all the majors each week. And the learning continues, but, building confidence, discipline, and a winning mindset, to master the markets comes from you forcing the boundaries every week to get better and to continue to get better. And you need to accelerate your learning. You need to even if it's on paper, be challenging yourself to get better. And that's where the growth will occur. You're going to make mistakes, absolutely. I make them every single week. I try to make the smallest ones I can, especially when it comes to trading capital. But I know that just inherently for where my goals are and where I want to get to in terms of growing that account and having it irrelevant of size, I need to be on the end-of-day charts. So hopefully you got some value from today's video. Stay disciplined, stay focused. There's opportunities every single week in the market. So the better you get, where do you want to be in 12 months? Let's you and I get better together. Have a great trading week. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.